Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Prince Pipes, a very interesting small cap company. Let's understand whether it is a worth buying or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Prince Pipes, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel. It will help you also ask me questions on a daily basis. And once you get the $10 membership, you'll get access to my portfolio, my watch list, which I update frequently. Also, my podcast, which I come up with every now and then, every week at least 3 or 4 times, and a number of articles I publish on different stocks and markets. For detailed company analysis or stock analysis you want separately, individually, you can directly email me and we can work things out. Now about the company. Prince Pipes was established in 1987, provides a range of plumbing pipes and solutions. They manufacture a number of PVC pipes, sewage and agricultural pipes. High profit growth and return ratios are there. They also provide solutions for borewell systems and water storage. So there is a gamut of, you can say, uh, solutions for piping and sewage and you can say plumbing that is available with it. But remember that there are other companies that provide the same thing, other larger companies, even listed and unlisted companies that provide the same sort of, you can say, services and products. The market cap of the company currently is only 1100 crores. If you look at the numbers, then the numbers are not that great, considering there are numbers published by other companies in the consumer domain which are doing extremely well. But if you look at the sales number, then down by around 14.5%, profit down by around 10%. There's high debt, but the positive thing is high institutional and promoter holding with 10% free float. That means 90% of the stocks are with some HNIs or some players which are strong hands, and the stock may not fall that much. And eventually, what you will see is that the stock could go up higher with better numbers. So with strong hands getting into the stock, what drives the stock is numbers, and then what stops it from going down are these people who have bought it for at least 5 6 8 years. The return on equity is 23%, and operating profit margin is slightly lower at 12%, but is still doing fine. If you look at the performance of the stock, then it has been a recent listing first of all. So there is not much of a data considering the price pattern over the last few years because the listing has been very recent. It has done reasonably well till Feb March when this decline happened, and when the market really crashed from those 12,000 odd levels. It fell sharply in February and March market crash. It fell nearly about 60%. So the highs of 190 was broken big time, and it fell to below 100 levels. Low equity has also led to sharp moves, and low equity has also led to the steep fall that we saw in the stock. So if there was a lot of equity base, probably buying would have come in at some levels, but here because of low equity and low liquidity, the stock fell very sharply. Has recovered 35% from those lows, currently trading at around 110 or so. Results have remained on the weaker side, and that has been a concern. So many stocks whose results have been decent, who have come back sharply, I mean the larger consumer stocks, even some auto stocks, etc., the rural theme and so on and so forth, they have recovered and came back roaring. And so some of the stocks are double tripled from those levels, some are up 60 70%. But the slowest recovery has been in such stocks as Prince Pipes, and the companies which deal with ceramics, which deal with real estate, which deal with infrastructure, housing, they have struggled. And this comes under the same bracket with plumbing equipments, etc. They will do well, only pipes etc. will do well only when housing will do well. so results may continue to be subdued. The return ratios are fine. So the best features of the company are that it is a low market cap. The business is pretty good. The gamut of products that they have is good. So if business starts doing well, the numbers could kick in very quickly, and the market cap could expand very swiftly. But the business has to kick in. Business have been growing with expanding profits till recently, till February, March. It was growing. It is one of the better small cap in this space. So I'm not talking of the total small cap index. I'm talking of the piping business. I'm talking of you can say the business in which infrastructure ancillary falls. Probably Prince Pipes is a better stock than others. There are many other companies that are nearly bankrupt at the moment. Scope of strong order book from so that is there, and there's scope of margin expansion and better realization once things normalize. So there's the scope of better order book, and there's scope of margin expansion and better realization once things normalize. There's a better product mix, as I explained at the moment. What are the risks attached? Being in the infrastructure space, that is a bigger risk. So, being in infrastructure space means that infra and real estate needs to do well, and which I think may not do well over the next 1 year because of the kind of situation that we are dealing with at the moment. And I think things are going to get worse, and that is why people are not looking at this stock. Slowdown in economy will also hurt the business. So, apart from the pandemic that we are facing, economic slowdown is also a concern for this industry because people are not buying into houses. This is because they don't have the money, because you need a lot of money to buy into houses, etc., compared to buying into staple goods or services or products. No one knows how long the sentiment will remain damp for the real estate sector. So really, I am saying 6 months to a year. This could just continue because once the pandemic ends, economy opens up, then only we will know the scale of the damage, how many shops open, how many do not open, what are the businesses that have faltered. So this business is going to face a lot of trouble. Now people will also try to save and put money into insurance and better safer bets like FDs, etc., and keep money safe rather than going ahead and going on a buying spree. So you have to take that into consideration. There is chances of more shutdown and slower recovery in the housing sector, and that would really hurt if the housing sector do not recover in the next 1 year. Suppose it takes 2 to 3 years, that will hurt the numbers even further, and that is why at this point of time nobody wants to put their hand up and put money into play into this sector. High debt has increased, and that is a major concern, and heavy competition from other larger players. As I explained, that there are many companies which are in the same space, many companies which provides pipes and different types of PVC pipes, etc. I mean, Prince Pipes is not the only one. The barrier of entry is extremely weak, so a lot of companies can get in later on. So a lot of things are there because of which the stock is trading at where it is trading at the moment. If you look at the technicals of the stock, then major long-term support lies around 80 to 85 levels. Currently, it is at 110, 115 to 120. So currently, it is staying at a you can say a resistance zone. The strong up move is expected only above 130. So at 110 to 115, if somebody is holding the stock, then he may very well look to, if is making profits, to book out, because 130 is a strong resistance. And if somebody wants to buy, then probably wait for declines to get into it closer to 100 or less than 100, closer to 80 85 levels. So as I explained, that if one needs to buy, then he needs to buy it around 80 85 levels, wait for declines to buy into such a stock, and probably it may have seen the major lows that it made, so around 85-90 would be better to buy at, probably a 20-25% decline. 100 seems good levels to accumulate, but even 90-85 it could go to if market falls from here. I'm expecting a decent fall in the market in August and September, looking much better on charts than in March, because the fall was extremely steep and now it has stabilized a bit. So my assessment and call on this stock is, if you have it, then you just hold it for about 2-3 years. Probably over the next 2 to 3 years, it will give you good returns. Not no immediate returns are expected in the stock, but there are better, larger players in the same segment that you can invest into. There are other pipe businesses that are listed that you can get into. There's phenolexes businesses. There are other also. Will take time to reach full potential. I think 3 years minimum that you have to take in account, that you have to wait for this to play out. Keep track of events and numbers need to improve or at least stay stable. If the numbers are declining very sharply, then you need to exit even at losses. And if you have not bought into it, buy only when numbers are very good and really getting big and you're seeing a lot of traction in the business. Otherwise you will be trapped again and you'll just hold on to the stock for a longer period of time. So this was my video on Prince Pipe. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.